Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Tuesday, March 11th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at May corn up 2.5 at 474.5. May soybeans were up 3 3/4, 1017 3/4, and May Chicago wheat was down 4.5 at 558. No export sales announcements here this morning, so we'll jump right in. Today should be another busy day. We've got USDA report at 11 o'clock. We'll touch on that briefly here this morning. I know there was an announcement there yesterday from the USDA just in terms of them taking tariffs into account, trade policy into account on this report. So it should be interesting there. But yesterday, export inspections were strong. Corn put in a pretty good performance given everything it was facing in the outside market. So with that, Justin, maybe a few thoughts to kick us off here this morning, and then we'll throw her around the room.
Yeah, volatility continues on the open last night. Overnight markets, NASDAQ was down 300 to start. Now it's trading kind of unchanged. So kind of whipping around still. I think just trillions and trillions of dollars are flowing through these markets right now. So you've got some really smart people, obviously trying to figure out, there's some, we talked a little bit yesterday, but maybe just kind of a general shift in, America's stock market has outpaced basically every other stock market, every other asset class for a couple years straight now. So I think some rebalancing and, moving money around different things is going on right now as these, different policies come into light, and still a lot more to figure out, obviously. But I think you're just seeing incredible amounts of money just either get to the sidelines, maybe, think, interest rates might come down, or the kind of companies that have been lagging, versus the Mag 7 for such a long period of time now. I think you're just kind of getting some rebalancing of that, and commodities are no different. They're in the middle of all this as well. The dollar's had massive moves. Different currencies have had big moves. So just tremendous amounts of money moving around. And I think, which we said a lot, just the volatility is going to continue. Report today, the comments that the USDA now is going to be on top of things. As far as forecasting, seems a little odd to me, to know what these tariffs or that have come on and off already so many times, to say like they're going to factor in what that means for global trade, I think's generous to them. So I think by all accounts you would say that corn exports should probably go up. U.S. corn exports in this report. Does that mean that they won't because there's some tariff talk? And I guess we'll see. Obviously the big ones at the end of the month. Hopefully we don't have the government shut down and we figure out something between now and then. But yeah, and that's, there's another reason, right? By Friday, you have to have some kind of resolution here, or we start, fearful on government shutdown talks. So we have been shut down for reports before. Hopefully this isn't one of them.
Yeah. Ben, what's on your mind this morning?
Just looking at the charts before the report here, you got corn below its 200-day, but above its 50 and 100. Soybeans are below all major moving averages. Soybeans are a market where I'm not sure anyone really wants to sell them because the time of the year that we're starting to enter into, but it doesn't feel like anyone really wants to buy them either. I think it's going to be biggest threat to us is we get focused on macros and all these things that are changing around, and we kind of skip your maybe a flat line for our seasonal type of rally where we get into that peak uncertainty. I think that would be our biggest threat today in the grain market. But it's been a nice recovery off the lows. We've gotten back about half of what we lost in corn, and we'll see how things play out today with the report. I still think that corn will probably find some buyers on breaks, and we'll see what happens from here.
And Dust, JP Morgan out this morning, but like looking at like around 40% now their recession meter is up to. So I thought that was interesting this morning. So maybe touch briefly on just some of the currency moves and things that are changing around here in our outside markets.
Yeah, whooping around really fast. I mean, the real has broken, quite a bit off the high of 1750, and it's down to sub 17 here last night. We're back up a little bit today. I think that for all the weakness the dollar's had, where it's been 6% off of its recent highs, you would think that would be a very positive thing for grains. But when it's also negatively impacting certain emerging market currencies like the real, it's not necessarily a great sign. If crude oil is going to start slipping down to the 60s or maybe even into the 50s, that's obviously not a great thing for corn either. So I would think that's the one thing kind of coming out of left field. Globally, I think corn stocks are fairly tight. We still have to prove a South American safrinha crop in the months of April, May, and June. And we still don't have, peace yet in the Black Sea region. But we're looking at global corn stocks to use ratios that are held outside of China as extremely tight. So we have a very small window for success here. If we do not hit at least trendline yields and have 94 million acres in the U.S., I think there's still chances that things get, quickly go into a demand rationing phase. And there's in a vacuum, there's a reason the funds got long. They didn't just build, from a record short position to near record long in a very short period of time for no reason at all, just on momentum alone. There's fundamental reason behind it as well. So I would still keep that in mind. And one thing, when they liquidated as much as they did last week, second largest liquidation out of over 1,100 weeks of data, that may not be just because of momentum or a change in fundamentals. It may be because of your recession risk concerns, Dan, that you talked about. So if that were to snowball on top of each other, and all of a sudden we see the Dow down another 1,000 points today, and recession indicators are just flashing red and crude oil is falling to low 60s, that would be the out of left field that I'd be worried about for commodity risk in corn and beans, even though things are fairly tight globally. And we all experienced 2008, 2009, corn was near $8 at one point that summer. Crude oil was well over $100 to start that year. And, we had crude oil down into the lower 30s and 20s eventually. Corn was back to $3. I mean, those were both the same move because of the same reasons.
It's interesting, Dustin, just kind of adding to the velocity of trade here is, 45 days ago, most of the major analysts were talking about S&P gains in the 15 to 20% range again this year. And, now we're recession, so just that's a very, very short time frame. Where is it this, does the news follow the stock market? It happens in our markets a lot, right? Like price action dictates corn yield, for example, where all, things look really bad. And then the corn market breaks 20%. It's like, oh man, yeah, yields are great. Yields are fantastic.
Yeah.
Right. Yeah, and then you rally, and it's like, oh man, corn demand just really good, and like we have a really tight global balance sheet, right? So like if corn were to go rally back to the highs for whatever reason, we would all focus on how tight the corn situation is, excluding China, right? If we went broke to the lows, we'd talk about, ethanol margins are down, and the Trump administration might get rid of biofuels. So it is. I think it's a lot of news chasing price action too in all these markets.
I would not discount that at all. I believe that, and I especially think that when we're talking about like things like the Brazilian real, it's like you go see the Brazilian real breaks 22% last year, and that's a big part of the currency arb is that Brazil is undercutting this whole time. Well, through that whole year, none of the headlines suggested it was because of that, right? Very few people were really saying that we were breaking that day because the real was down. It was some sort of fundamental reason, to your point. Oh, weather was a little better. Like that was a headline search, in my opinion. A lot of those headlines, because it was clearly, the real dropped 2% that day, and that was just not being the focus of why we broke. I do think that when you think about like things like Doge and the unintended consequences of cutting out, $500 billion or $1 trillion of spending, that might be new information that the market had not considered. Or they had not considered that was going to be, they were going to be as quick and as aggressive in cutting out all of this excess spending and finding a lot of the fraud that they're finding. So that may be the new piece of information, though. However, that is a change from what the market was expecting. Just my personal opinion of like unintended consequences of things we don't really know. And it's not like I'm predicting anything in that statement. I'm just saying, kind of be mindful that we really have more uncertainty ahead of us, I think, than we normally would, because the geopolitical winds are shifting so fast, and there's things that are happening that haven't really happened in 30 years. And we went from, risk of maybe losing control of our currency through inflation to now it's like, well, we've got a hard stop in all excess spending. And the only thing I would say to that is like what we've been saying this entire year is maybe we expect bigger swings in either direction than we normally would expect. It's like just box yourself into some safety. Don't take such a black and white opinion about the market right now, because I think this is a market to chop that type of trading up.
Yeah, it's interesting. Just kind of adding that too is like if you look at this administration and the people that have been brought on this time around, these are all really savvy business people from the business world coming into a stagnant bureaucracy of, lifelong politicians. Like they're moving at breakneck speeds that the market's just not used to, as you would if you were coming in to, flip a company, right, to make it profitable. And you look at like, Sachs and Musk and these people that are really trying to make a change in a short amount of time, and it's going to cause things to do things that we haven't seen for a while. Because usually it's just right. It's kind of waited out to the next administration and get tie things up, and not that that's not still being tried, but if they can get some half of these things done, it's things that it's just a speed we're not used to.
Well, this continuing resolution, I mean, if they get this CR passed, there's talks that by the end of the week they want to get this resolution passed that takes them out to September. And President Trump was pretty adamant yesterday about like, listen, you give us this time to September so that we can continue to cut this spending and get things in order, and if they go along party lines and get this passed, then that'll be, to your point, Justin, very interesting to see if, continuing down this path.
It's going to be tough. I mean, there's just a lot of, Republicans on this side of like, I thought we were cutting, and it's going to be, this was supposed to be the CR. It's always kick the can down 6 months. Yeah. Right. So I think it's gonna be hard. I mean, hard. There's several outspoken ones, even this morning on X, right, that are like, I just can't do it again. So we'll see. Yeah,
it's hard to be a fiscal conservative and continue to sign on for defense.
$2 trillion more, and then we like do more now so we can cut more later. Like it's a tough one.
Yeah, that's a tough one.
And on the Democratic side, right, like they're trying to prevent Doge from cutting a lot of these things. So
they're slush.
Nobody wants to cut, right? This is the hard part. Everyone talks about the deficit, and when it actually comes to fixing it, everyone's like, well, wait a second, like that, so we'll see.
Yeah.
Don't you think the silver lining here for the ag industry is if we can kind of get our house in order, we can get interest rates lower, potentially asset classes come down, right? It's going to be some relief to the balance sheets of the American grower, wouldn't you say? And, especially if we have a weaker dollar and, potentially to have some more demand, there could be a good silver lining here for, the 6 month, 12 month, 18-month view.
Well, I think too, not to talk for an hour about this, honestly, but just the forecasted energy demand growth is to the magnitude of like 10x between now and like 2040. And the only way to do that is to utilize, I think, biofuels, especially if we want to be kind of call it energy independent, is that there's going to be massive growth in the nat gas, oil. So, I mean, honestly, solar, biofuels, like you're going to have to utilize a lot of it. So I think energy policy, and biofuel policy is going to stay strong if that's really the path we want to go down. So I think it's going to be continued. We've talked about this a long time, but strategically it makes a lot of sense that you would continue to ramp up these things that are proven. So I do think ag, to your point about the asset class, the fear there is that so much of ag lending is based on the value of farmland as well. So you need to have, you're kind of
Right.
Which one do you want?
Which one do you want?
Like, do interest rates come down because your, farmland's down 30%?
Right.
Or so it's not an easy one answer, but
Yeah, you could argue that that's been the backbone of getting guys financed is the equity in the land, and they're able to.
Well, it
use
has, but
that
where are we
value.
at? We're still under cost of production for a large majority of growers, and not by a little bit. And I think a lot of people that are out there on social media saying that farmers are making a ton of money at, 420 corn. If you own all your land or inherited it or bought it at way cheaper prices, yes. But for a large majority, which is in the heart of the belt, I'll say 70% plus of acres are rented at levels and they're below cost of production. So it's not a strong system. Now we've come off really good years, but definitely prices need to realign, and we're still seeing that inflation in ag, at least in grain production. So
Very good. Real quickly here around strongest day on the board yesterday, you had cattle, in the face of the stock market. It was a pretty good performance. And then the back end of hogs looks like they're obviously rolling out, but another strong day in hogs. So quickly here, what do you got for us this morning?
Yeah, well, it is kind of interesting that we didn't really see too much macro concern. I mean, I think maybe down the road, sure, but overall, I mean, there's a lot more optimism going into this week, and we're starting to see that, especially in the beef. You had choice rallying 268 yesterday, select 115. I mean, beef 90s are leading the charge, so it just seems like it's a little bit early for that kind of demand really to pop up here. But overall, I mean, it's a really good sign. I'd say just especially looking at a cash market that looks like it could be steady, possibly even a little bit firmer this week. So we'll see how that shakes up. Like I said, I think there is some inherent macro risk here, but generally speaking, the focus is going to be mostly on cash and the beef all week. So that being said, the hog market, yeah, just kind of a flat market yesterday in cash, 88.90. That was just up a penny. So didn't really get too much cues from that, but it's been a really good move. So I think naturally we're going to see some consolidation at this stage in the game. I mean, I think just seasonally we're coming into this time frame where cutout definitely just kind of trends higher, stays strong, especially with the weather. So we'll see if that continues, but obviously the hogs are going to be a lot more susceptible to the geopolitical risks, especially more tariff talk and everything. It seems like that's dissipating a little bit, and we'll worry about it more in a month, but just something to keep in mind, especially going after the report, and see what USDA thinks for production. So we'll be eyeballing that today.
Very good. Appreciate the update there. Just came into the open. We got May corn up 3 here this morning. 475 is the last. May soybeans are up 6 1/4, 10.20 1/4, and May Chicago wheat's down 4 at 558 1/2. USDA report will be out at 11 Central. We'll take a look at those numbers, visit about them tomorrow. If you got any questions ahead of the report, be sure to give us a call. Also, special deal. We're coming into April 1st here. It's going to be a couple weeks. We got a couple weeks left. Special deal for new AgYield folks that are looking for some help. Also, you got a couple days left to make your crop insurance decisions. If you need to bounce some ideas or looking for some assistance, don't hesitate to reach out. I'd be more than happy to visit with you there. And as always, appreciate everybody that tunes in on a daily basis. Go ahead, throw us a like, and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield. Doesn't cost you anything to do so. So again, thanks to everybody that watches every day. We're doing this live at 8:15 Central Time on X, Facebook Live, and YouTube Live every day that the markets are open. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.